When you retire, your life changes in many ways. And in one way, your finances change dramatically. So instead of contributing to those tax-deferred retirement accounts, you have to start tapping into them and start actually paying taxes. My guest here to talk about this is Mike Russo, who practices in Chicago, Illinois. Mike, welcome. Thanks for joining us today. So when someone retires, they're often surprised to find themselves in a higher tax bracket. How does that happen, and then how do you address that?
Thank you, Scott. Taxable income at retirement time is very important because we need those assets and that income to live on for the duration of our life. So if someone found themselves in a bad position, it's probably because there might have been some planning early on that could have been done that wasn't done. But the good news is we can kind of take a good look at where they are now, look at their personal tax return, and figure out what buckets are income sources that we can utilize. And each of those buckets or income sources have different tax rates. So there's a way to stretch the income, minimize the taxes, obviously stay within the guidelines of the law, and just make sure the client gets the most tax-efficient investment return on the assets that they've saved for retirement.
So how does the government tax 401k accounts?
Typically a 401k when someone retires goes to their IRA, their individual retirement account, and if there were no Roth savings at that point, that's fully taxable income. So we have to identify what amount we can take out per year, what we have to tax withhold for that, and how it'll impact other things like Social Security income or any other taxable income they may have. So we do look at that with the client. We make sure they can stay within a range of withdrawal that still grows and protects their assets through that period of life.
And finally, with IRAs, there are required minimum distributions. Are there ways to minimize the taxation on those distributions?
On required minimum distributions, some clients need those dollars to live on entirely, and other folks don't really have a usage for it because they have other income sources, and there are strategies those clients can employ to make those dollars go a little further and to leave a legacy behind to their family.
Great, Mike. Thanks again.
Thank you very much, Scott.
My guest has been Mike Russo in Chicago. Thanks for watching Retirement News Online.